Good afternoon, Fabio Donetti with the Musings of Winston. Difficult word, Musings. June 28th, July the 2nd. And for the week, we finished with another record. The Dow put 352 points or 1%. The Nasdaq 34,000 or 1.9%, and the S&P 1.7%. And the big record, in a way, to us has to do with these impressive numbers that we keep seeing in consumer confidence, investor confidence, the extra $3.5 trillion that consumers have at their hands and they haven't spent. So clearly, the market is looking into that. As we know, we've talked a lot about this, the end of COVID, more and more going back to normal, more places in the world are opening. We're ways to go. We still don't have fully operational, airline flights around the world. Some countries are still closed, but more and more we have this collection of good news that keep coming our way. Also, I think very important, it was the end of the month, the end of the quarter, and the end of the first half of the year. And how did your portfolio did? I mean, in general, there's only one exception: gold down 7% or 6 actually, 7 for June, 6 for the year. Most of the other markets, emerging markets, developed markets, Europe, US, did very well. In general, everybody around the double digits, anywhere from 10 to 15, 16%. Commodities did very well. The best one, oil, up 50%, and carrying with them the energy companies, and also the financial sector that was very sleepy last year did very well. So you should review your portfolios. This is, again, first half of the year finished. How do you position yourself for the second half of the year? So speaking about banks, the major banks, after passing the stress test last week, for the week before, announced major stock buybacks and dividends. The biggest ones were Morgan Stanley and Goldman Sachs, the other less so, but it was something that the market was expecting on the view again of passing the stress test and the Fed relaxing some of the controls and restrictions that had put in place at the time of COVID. So that's positive. And I think, with that, I'm going to just loop in something that, the Microsoft CEO, Satya Nadella, said that hybrid work will be the biggest change in our generation. And we're seeing that fight now in the financial sector. Places like JP Morgan, Goldman Sachs, Morgan Stanley says, we expect everybody here. Citibank, UBS, Barclays have said, well, we are open to a hybrid model. And Credit Suisse announced tonight maximum flexibility to work. So I think that, the fight for talent will be, as someone said, the signing bonus could be hybrid work. And I think it's here to stay. We have learned that we can be as productive or better working from home, maybe not every day, but some days of the week. And I think that will bring permanent changes in the way we work, real estate, commute, and we will make life easier. If less people commute every day, we'll make, especially for the big cities, life much easier. It will drop the price of real estate that we know is very, very expensive. So it will be more affordable to companies and people to operate in the big cities, and it will decongest to a degree the heavy infrastructure that these big cities like from Sao Paulo to Calcutta to London to Tokyo support in terms of commuting time and commuting infrastructure. So I think that will be positive. On the policy front, two issues. One side, Robert Rubin, former Secretary of Defense, former of Secretary of Treasury, I'm sorry, under Bill Clinton, former co-CEO of Goldman Sachs, added his serious worry about inflation, that maybe we're not being very prudent, and he added his voice to that of Larry Summers, another heavyweight on the Democratic Party, which kind of led us to believe a little bit that there is some internal, no, I wouldn't say conflict, but internal arguments in the Democratic Party about whether President Biden maybe is getting too close to the progressive agenda, to the Bernie Sanders, the AOCs, the Elizabeth Warren, and not probably paying attention to a more moderate Democrat. So we'll see, it's another voice. And with dovetails a little bit what we saw, the labor report, The market was expecting around 750 to 800. It came at 790. For the first time, the number came in line with expectations. Remember, the last 2 months we have had a lot of volatility on the number, on the predictions, and that's in a way to us, reaffirms the view that in the last meeting before the break, July 27, 28, the Fed will not do anything, will not announce any change because, as we say, at this pace. Remember, we were doing 1 million jobs a month. Now we're doing half of that, 700,000, depends. It will take double the amount of months to get back the 6 or 7 million people that are still unemployed. And remember, the leisure industry, hotels, they're still not there, and a lot of people have lost their jobs. So I think, again, we still are in that debate. The market so far is voting that the Fed is right. 10-year rates are at 148. So the market is for now saying we think that Mr. Powell is right. Inflation is transitory, and the stimulus will keep coming, and that's good for the market. Actually, as I speak now, it's 142 on the Treasury. So clearly, and that's why we see a record in the markets, because we know that the market is telling us that the monetary stimulus will be here, will be stay here for a while, and that's liquidity. And final comment I have is apparently after yes, no, we don't have an agreement with OPEC. One of the things that we learn is that these things do happen. Everybody say, oh, don't worry, we're going to have an agreement. Oil was closing around 72 on Friday. It's trading now at $75 a barrel because it looks like the UAE, small but powerful. So, there is like the small and powerful players. I don't know, they produce maybe 2-3 million barrels a day. Saudi 10, Russia 10. But they were the guys who basically changed the dynamics of the deal. And there is no deal, and apparently there is no discussion. So oil is shooting up in price. So, everybody was saying, oh, it's going to get a deal. We didn't get a deal. That's all we have. Have a great week. As always, live with our clients from New York every day at 8:30, Zoom Interactive. You can participate. Have a great week.